Yes. Hello, friends. I'm going to talk about on the topic GST audit by department under Section 65, under Section 66, and GST so-called notices issued under Section 74 and 75 of the GST Act. First of all, what is audit? Audit has been defined in the GST law as per Section 2, subsection 13. It talks about four important documents: records, returns, and other documents maintained or furnished by the registered person under this Act or rules made thereunder or under any other law for the time being in force to verify the correctness of the turnover declared, tax paid, refund claimed, and input tax credit, and also to assess the compliance with the provision of the GST Act rules made thereunder. So in audit, the four important factors has to be checked: turnover declared, tax paid, refund claimed, input tax credit availed. But it will also include the assessment. SSE has to also will be checked that compliances has been done as per the law or not. So section 35 of the GST Act talks about accounts and other records. So basically six types of basic important documents that has to be kept at the principal place of business. As recently there is an inspection has been started, a special drive has to be going on for 2 months. So at the principal place of business, this six important document has to be kept at all the addresses where the godowns, where the goods has been kept. All the godowns has to be added as an additional place of business in the GST portal. So what are the six documents? Production and manufacturing of goods, inward or outward supply of goods or services or both, stock of goods, input tax credit availed, output tax credit payable and paid, and such other particulars as may be prescribed. So these are the basic six documents has to be kept in under Section 65 of the GST Act at the principal place of business, and also at the additional place of business you have to keep the stock register. So as per the Section 66, the periods of retention 72 months as per the GST law. You have to keep the books of records up to 72 months from the due date of furnishing of the annual return for the year pertaining to such period. So 72 months you have to keep your record from the due date of furnishing of your annual return for the financial year. Now, the tax audit. Tax audit by the tax authorities. The commissioners under Section 65(1) can generate a specific order to conduct an audit of a registered person for such period, as may be frequencies as may be prescribed. So Section 65. Section 65(2) talks about the audit will be conducted at the place of business of the registered person or in the place of the GST department, either or. It can be happen anywhere. Section 65, period of audit. The audit has to be completed within 3 months from the date of commencement. So if this commissioner is satisfied that the registered person cannot be completed within 3 months, then by giving a reason in recording in writing, he can extend the further not beyond 6 months. Extend the period not exceeding 6 months. So total is 3 plus 6, total 9 months will be given to complete an audit by the GST department under Section 65(4). And the commencement of audit will the date where the records and documents called by the department and the taxpayer made it available to the GST officer, whichever is later. So the date starts when the taxpayer has submitted the documents to the GST officer. From that date, the 9 months will be counted. Generally, I'm talking in practical sense. 3 plus 6, they're taking 9 months. Obligation of an auditor. Auditee, the taxpayer, has to give all the facilities for the verification of books of accounts to the GST officer and provide all the information as may be required for timely completion of the audit. And Then on the conclusion of the audit, the auditor officer will give their findings and reasons and whose records are audited, and findings and rights and obligation and reason for findings. On the completion of audit, information is to be required, provided the registered person, including the findings during the form of the audit A02 within 30 days of the conclusion of audit. So ADT02 will be the final GST audit report, has to be issued by the department to the taxpayer within 30 days from the completion of audit. So once the audit is completed, then the taxpayer, if the taxpayer is agreed and pay the tax, then there will be no further action will be taken by the department. But if the taxpayer is not agreed, then the department will issue the following notices under section 73 or 74 as applicable. So whether audit is mandatory to every taxpayer registered person? No, audit is not mandatory. It will be selected on random basis. Where any prior intimation is required before conduct an audit? Yes, minimum 15 days is the minimum 15 days is allowed by the department and issue form GSTR ADT01 prior to intimation of visiting their office. What is the period within which audit is to be completed? Within 3 months, and additional 6 months can be taken with the permission of the written permission with the commissioner. I will go a little bit quicker. Yeah, there's a landmark case by Odisha High Court in Simon India Limited versus City and GST Officer Kataktu Circle in 2022. The department has issued an audit report and final report without seeking the reply of the petitioner. Then the taxpayer Simon India went to Odisha High Court on the ground of principle of natural justice. So ADT02 was dismissed by the Odisha High Court, stated that the opportunity of showing the document was not given to the taxpayer, order to the GST department to take in consideration the documents provided by the taxpayer and pass the GST final revised audit report as per the available documents to the taxpayer. So this is a very good case to be highlighted whenever there is a conflict between the GST department and the taxpayer. Now, situation of violation of principle of natural justice in tax law. Some of the points I have highlighted here where the principle of natural justice is being violated in taxation law. When notice itself is not served, when arbitrary orders are passed by the department without granting opportunity of personal hearing, where relied upon documents or copies or seized documents are not provided by the department despite request letters submitted by the SEC, where the cross-examination is denied, where the written submission for notice or for personal hearing is not considered, when the request for modification, stay application is not considered, where fundamental rights granted under the Article 14 and 21 is not been protected, when reasonable time for reply or for adjournment is not been provided by the GST department, and where the order is been passed with a new or additional demand in the revised GST notice. When an order is been passed with a new additional area. So these are the areas where principle of natural justices will be violated. You can challenge and go to the High Court and get a stay on your so-called notice. Special audit, it's a section 66. As the GST audit is a very new area, so now many states has started a process of inducting the GST audit by the professionals. Like State Department facing a lot of problem in the service sector because they have no experience of the service tax. So there's a great opportunity for chartered accountant and cost accountant to take up the audit on behalf of the GST department and do something to the nation building. So what are the section 66(1) talks about? The scrutiny, inquiry, investigation or any other order proceeding not below the rank of assistant commissioner due to the nature and complexity of the case and interest of revenue is of the opinion that the value has not been correctly declared or the credit level is not with the normal limits, then the commissioner, with the prior approval of the commissioner, directs such taxpayer by the communication in writing his record, including the books of account examined by the auditing of the chartered accountant or by cost accountant nominated by the commissioner. So there is a great opportunity for chartered accountants and cost accountants to get empaneled with the GST department and take up this audit of the on behalf of GST department. As the Assistant Commissioner, based on the nature and complexity of business, and it is the opinion that the value has not been correctly declared or credit level is not within the normal limits, after commencement and before completion of any audit, scrutiny, inquiry, investigation, or any other proceedings under this Act, may direct the registered taxpayer to get his accounts audited and by an expert. So the chartered accountants and uh, cost accountant. The notice will be issued by the GST department in the form ADT03. So this form is very, very important to be issued by the taxpayer, by the department to the taxpayer to conduct an audit on from the professional. The form is ADT03. It will be issued online or in the email or hard copy, any way, but the best way is to be issued online and by email communication by the GST department. The Assistant Commissioner need a prior permission of the Commissioner to issue the direction of the taxable person. So you have to make a professional has to check that the Assistant Commissioner has taken a prior permission in written from the Commissioner for making any special audit. Now the special audit has to be the professionals has to submit the report within 90 days after getting all the documents from the 90 days counting will start from the day when he started start the document from the taxpayer or visiting to the taxpayer place, whichever is earlier. The registered person shall be given an opportunity of being heard for any material gathered on the basis of this special audit, which is proposed by the to be used in any proceeding under this Act or rule made thereunder. So all the expenses and the professional fees for the special audit of the chartered accountant or cost accountant has to be borne by the GST department, and the professional has to submit the report to the GST department. So as per the audit report of the professionals, the mm, department will issue notices under section 73 or 74 because of these following reasons, that is the tax not paid, short paid, or erroneously refunded, or input tax credit wrongly availed or utilized. So I will be going a little bit quicker. These are the already we have discussed. Now, common types of GST notices received by the taxpayer. So these already we have discussed in my other PPTs also. I will just have a quickly highlight some of the points. Common notices are delay in filing of GSTR 1 and 3B, GSTR 2A 3B mismatch, GSTR 1 and 3B mismatch, output tax mismatch, 9 and 9C mismatch, payment of interest delayed by 3B return both in ITC and cash, inconsistency in filing GSTR 1 and 3B, and inconsistently filing GSTR 1 and e-waybill portal. So these are some common areas where GST notices been issued. Claiming of refund or claiming in a wrong way. Claiming refund in a wrong way because department do not verify at the time of issuing refund. They verify after when the time of audit or inquiry. If anything has been refunded wrongly, then you have to refunded the taxpayer has to refund back the erroneously refunded ITC or whatever credit you have received with interest and penalty. So how to counter the mismatch issues by the supplier under section 16(2)(c). 16.2c, what is the 16.2c? Subject to the provision of section 41 or section 43a, the taxpayer's charge in respect of such supply has actually paid to the government either in cash or through utilization of input tax credit admissible in respect of the said supply. So 16.2c is a very common notices being issued to all the taxpayers. If due to the defaulter of the supplier, if the supplier has not paid the tax to the GST department, generally the department catch up the recipient. So these are the counterpoint for such notices. First is the legal maxi. Legal maxi is a very established principle and or the proposition of law used by the lawyers from very from 200 years ago. So this practice has been continuing. So we can use this legal maxi, that is lex not conjugant impossibilia. Bombay High Court, Common of Income Tax versus Celoplast. The law cannot force taxpayers to do impossible tasks. So this legal maxi talks about the law cannot make it force the taxpayers to do something impossible. How can a taxpayer can know whether the suppliers has paid the tax or not? There is no portal, no system has been given by the government to check this whether the supplier has paid the tax or not. Because as I am a recipient, I am paying tax to the supplier, and now it's the supplier's liability to pay the tax to the government. So there, if it has been collected from the recipient, there will be a double tax burden on the supplier, on the recipient. The tax has been already paid to the supplier, and again now the department is asking to pay the tax with interest and penalty. So how can a business will survive in such a scenario? So no control over the payment by the supplier, no measures to check if the payment has been done. There is no portal facility provided by the GST department to check these measures, whether he has utilized the admissible credit, and there is also no portals been given by the GST department to the recipient to check whether the supplier has filed GST 13B properly with proper legal ITC and paid to the GST department. Taxpayer, tax is paid by the supplier. I will continue with the same point, how to counter this Arise India case, where it has been also said that purchasing dealer cannot be asked to do impossible recovery from the seller first, where there is no collision between supplier and recipient, and non-payment of the supplier cannot lead to reversal by the recipient. So it's same. And again there is another case by the Madurai bench of Madras High Court in 2021. It is related to GST. DY Bethel Enterprises versus State of Official. ITC cannot be straightaway recovered from the recipient on the failure of the tax supplier without allowing the recipient to examine the supplier as a witness and initiating recovery against the said supplier. So without taking any action on the supplier directly, department cannot claim the tax from the recipient. Now mismatch between GSTR 2A, 2B versus 3B. So rule 36.4. It has been notified as per the notification 49 dated. It has been effective from 9th of October 2019. What this rule talks about? This rule talks about that a person can take the GST credit only on the basis of GSTR 1 on the basis of 2A or 2B as filed by the taxpayer. The circular 123 dated 11/11/2019 clarified that matching of ITC required only when this rule was notified, and it was notified on 9th of October 2019. So for the period 1st of July 2017 till 9th of October, 36.4 rule will not be applicable. What is this 36 rule 4? The 36 sub rule 4 talks about that percentage of 20%, 10% of maximum of GSTR 2A you can take additional as per the ITC available in GSTR 2A. So for the period of 1st of July 2017 to 9th of October 2019, you can challenge Rule 36(4) is not applicable. Post 9/10/2019 till Section 216(2)AA, the government has implemented the Rule 36(4), but they have not touched the Act. The backup of this rule in the law, Section 16, subsection 2, subsection AA, has been notified from 1st of January 2022. So how to counter 36(4)? No legal backing, since rule cannot supersede law. 36(9) Council meeting specified that to overcome this disparity, Section 16 to 2AA shall be introduced. Section 43A not yet been notified. Further, a new provision required matching of GSTR 2B. You can use the UBI Bharti Airtel case where it has been written that GSTR 2 is only a facilitator for taking the informed decision while doing the self-assessment. The above contention are relevant for B2B wrongly showing in B2C, tax shown under wrong head of ITC, tax paid in the GSTR 3B, not uploaded, wrongly uploaded in GSTR 1. So, how to deal with the Section 73, 74 so-called notices? There is a two Latin maxi which has been used to counter the GST department. Audi ultra petrum and nemo judicial in quosa, the use of principle of natural justice. It is a tested time principle of natural justice, that is Audi ultram petrum, means let the other side be heard, that no person can be adjudged guilty without being given an opportunity to answer charges against such person. And to hear a person, such person should be put a notice called as a so-called notice, which clearly states various aspects about the charges or the allegation in such notices, so that the person can understand the allegation and answer the notice. Nebo judex causa means that no one should be allowed in his own cause. It is a principle of natural justice. No person can judge a case in which they have himself. Justice must only be done, but it should not be seems to be done. Proceedings where so-called notice is mandatory by GST departments. Proceedings under Section 52, proceeding under Section 73, normal cases of GSTR 1 DIRC 01 has to be issued. Determination of tax liability under Section 74. These are the areas, around 7 areas I've highlighted here, where so-called notice is mandatory by the department. Without so-called notice, directly department cannot issue a notice for tax demand. Tax collection of under Section 76, penalty under Section 122, levy of interest under Section 50, general penalty clause of 125. These are the areas where so-called notice is mandatory. Some of the additional areas, some additional issues, so-called notice has to be issued under Section 130, penalty clause, cancellation of registration under Section 29. So without this, all these areas, so-called notice has to be issued mandatory by the department for taking any action on the taxpayer. Facts and contents of so-called notice: the facts of the case, the relevant provision of the law, discussion on limitation period, reason for applicability of extended period under Section 74, findings of earlier verification, cause of proposed action, grounds relied upon the proposed additional tax liability, special allegations, justification of why tax person is liable to pay tax, details of contravention and action where necessary. So 11 elements which are very, very essential for demanding any tax. Yes. So this is a landmark Supreme Court case where it is it has been given that 4 ingredients very essential for any so-called notice. What are these? The component in which is entered in the concept of tax are well known. The first is the character of imposition known by its nature, which prescribe the taxable event attacking the levy. Second is a clear indication of the person on whom the levy is imposed and who is applies to pay tax. Third is the rate on which tax is to be imposed. And the fourth is the measure or value on which the rate will be applied for the coming computation of tax liability. If the core components are clearly uncertain, it is difficult to say the levy of the tax under the law. Any uncertainty or vague in the legislature defined any component of levy will be not valid. So Supreme Court has given these 4 elements has to be present for issuing any so-cause notice. Otherwise, the so-cause notice will be invalid. Adjudication: after you get the so-cause notice, the process will go to adjudication. It is just like it is a quasi-judiciary body to act as a judge in a complaint or argument to make a formal decision about something. A legal process to resolve or a dispute between a taxpayer and a department. So in adjudication, there will be always be 3 persons. One is the taxpayer, one is the GST department who have done the audit and issued the so-called notice, and the third person who will adjudicate between the GST department who has done the audit and the taxpayer. Section 73 will be applicable when there will be 4 situations where so-called notices ensued under Section 73. What are the 4 scenarios? Short payment of tax, non-payment of tax, or non-payment of tax, erroneously claim of refund, wrong availment, or utilization of wrong availment or utilization of ITC. Under this 4 head, Section 73 notice will be issued to the taxpayer, and 74 will be issued in the case of fraud. So when determination of tax not paid, short paid, or erroneously refunded, or input tax credit wrongly availed or utilized by reason of fraud or any willful misstatement or suppression of the fact. So in this case, there will be 4 scenarios: tax not paid, tax short paid, or erroneously refunded, or input tax credit wrongly availed and utilized. Maybe the reason will be fraud or willful misstatement or suppression of fact. Under this scenario, Section 74 GST so-called notice will be issued. So this much I have given many things in my PPT. You can go through it. Thank you. This much for now. Take care. Bye.